Hey everyone, welcome back to Yuri's Box. In this video I'm going to be talking about the dollar and its relationship with cryptocurrencies. If you like this kind of content, consider leaving a like and subscribing to the channel. And as usual, nothing in this video is financial advice. So the video I made about the dollar, the last time I made, really talked about the dollar, wasn't really me trying to say that this is the bottom. I was just pointing out how potentially a number of ideas regarding that the dollar's finished, it's going to collapse, and all those hyperboles are probably a little bit overblown. And of course, we could have for the downside in the dollar. But when looking in particular at this downward move in the dollar, accompanied by what we saw in the past weeks, things like the long bonds, where we saw a lower dollar accompanied by higher yields, as well, represented by TLT being the inverse. So TLT selling off with the dollar selling off. And I pointed out last time how, if history is any indication, the times we saw this kind of correlation, again, with lower dollar and higher yields, what usually tends to follow is the exact opposite. Sooner or later, it'll take some time, eventually you get a higher dollar and lower yields. All right, you saw this in 2008 during the Bear Stearns kerfuffle. I'll forever use that word from now on. You saw it during Lehman Brothers in the worst part of the financial crisis, with again dollar selling off and yields going up, particularly on the long end. Another example is 1990, with what you saw from approximately summer of '89 till fall of 1990, and what followed that is again a stronger dollar with lower yields. In this video, I really want to keep on go on this theme of the collapse of the dollar is imminent, or is it? And look at crypto, because crypto is usually the first thing people point at when you ask people, oh, what do you think is going to kill the dollar per se? Crypto. Because it's decentralized, it's made to fight fiat currency, governments can't control it, and all that good stuff. And precisely Bitcoin, again, Bitcoin is seen as the arch nemesis, really, of fiat currency, and this has been one of the main themes, really, that has helped Bitcoin, propel, to higher prices, especially in 2021. I remember that vividly, especially given the fact that in March of 2020 we had QE galore, we had zero interest rate policy, we had fiscal stimulus as well as monetary stimulus. And so the idea that, the purchasing power was going down, you have to defend your purchasing power, you have to defend yourself against governments that are devaluing the currency and all that good stuff, was quite popular around 2021, as it is still today. Again, that is one of the things that makes Bitcoin appealing. So again, as a whole, all right, cryptocurrencies are often regarded as the dollar killer. Now, if you are a purist, to say, a crypto purist, that is, when trading cryptocurrencies, you'll probably go for, you sell dollars and you buy crypto, let's say you buy Bitcoin, and then you go and buy, say, Ethereum, you buy your altcoins, you do whatever you want. You don't use what so-called stablecoins, because you don't want to have anything to do with the dollar, right? If you're a purist. However, if you're retail, you're basically, let's say 70% of people that interact with cryptocurrencies, you're most likely going to end up using a stablecoin, right? This chart back here, again, was a Bitcoin against Tether. So again, roughly, I'm just using it as a rough figure, around 70% will be using stablecoins throughout their investment career in cryptocurrencies. And this is really an interesting point. All right, I'm probably making a bit of probably a bigger deal than that probably is, but I do believe that this is kind of a pain point for crypto, because this is one of the cases where narrative and reality are kind of like on two separate roads. All right, the narrative doesn't really reflect really what reality is on the ground. Because again, for an asset class that is that touts itself to be the dollar killer, you really wouldn't expect to see market cap of, and this is just USDC, for example, which is one of the main stablecoins we'll be looking at in this video. You definitely wouldn't be expecting to see the market cap of a stablecoin continue to grow and grow and grow. If your objective is to kill the dollar, the last thing you'd like to see is a digital version of that have success. All right. And in fact, for an asset class that is often regarded as the dollar killer, it doesn't really make sense to have basically the highest traded asset really on and of the asset class be a stablecoin, right? Here we have Tether, but if you were to put all the stablecoins together, you're probably comfortably in first position. Tether alone is in first position, all right, with the 24-hour volume. Again, this isn't just today. This is a norm. This is normal for Tether to be number one. All right. And again, for an asset class that wants to be the dollar killer, this kind of sounds like an anomaly. And this leads leads me to think back at 2021, and during really this sell-off right here, because I remember there were all sorts of FUD stories. All right. I remember Tesla was going to sell, then China kicked out all the miners, and then eventually we got to a point where actually we were saying that the US government was going to actually get more hawkish on crypto in general. And eventually, because crypto was a dollar killer, they were going to basically do everything in their power, being the US government, to stop crypto. And this is something I've always pushed back against. This is really the first time I've spoken about this, this thesis on my videos. But on X, whenever I found people talking about it, I just gave my 2 cents about it. And I always tried to push back, because I do believe that we should be paying much more attention to stablecoins. Looking at Tether, for example, all right? Tether has been on an absolute tear ever since its inception. And again, I should have maybe mentioned this before. What is a stablecoin? A stablecoin is basically, again, a digital representation of the dollar. And how do you mint stablecoins? Well, you usually go to an issuer. All right. And on on the US side, you have USDC. All right. Now Tether is I don't really feel comfortable talking about Tether, not because of all the stories, simply because I haven't really followed that story around Tether. I'm still stuck in 2023. All right. Things could have easily have changed, so I don't want to talk too much about Tether. USDC is often regarded as, the safest option, at least as if my memory serves me correct. And again, looking at USDC, USDC is associated with Coinbase and Circle, all right? And all you have to do is go on Circle, and they back Coinbase, basically, and you find everything you need to know, all right? Now, how does this tie back to, the original thesis, or me really trying to challenge the idea that crypto is a dollar killer? And in fact, it probably isn't, and it is exactly the opposite. Crypto, as things stand, with stablecoins especially, is a dollar proponent. It is actually helping the dollar thrive and actually really permeate the global markets. And the reason is, if you go and look for, this is the February report, all right, of the holdings that were backing USDC. Because again, in order to be a digital representation of the dollar, there has to be a cash equivalent holding, all right, something that is extremely liquid and something that again is cash-like. And of course, that is short-term treasuries, all right, bills, T-bills. All right, and for every dollar that is in circulation with USDC, you have basically an exact amount of T-bills backing those dollars that you use to trade on, all of your favorite meme coins and and altcoins and Ethereum and Bitcoin. And this is quite substantial in my opinion, because if what is backing stablecoins is US treasuries, as adoption of crypto grows, so will the adoption of the dollar. Therefore, so money, liquidity will be flowing into government bonds. So for an asset class that is painted as something that will oppose the dollar, something that is extremely negative for the US government, the facts on the ground tell otherwise, right? They say otherwise. They're not really corroborating this this thesis at all. Could things change in the future? Absolutely. But again, think about, and this really just to move into the conclusion of the video. You really have to distinguish really two selling points of crypto. And I really like to think about it as there being the two main things that, two really different situations, let's put it like this. You either live in a developing country or in a developed country. And if you live in a developed country, the main what you'll find attractive in crypto is the idea of being able to store your money in something that has no counterparty risk, that is completely decentralized and can never be kind of manipulated really by anyone. All right. Now, yeah, you can have wild gyrations in price, yes, but that what is backing Bitcoin, being the Bitcoin network, is sound. And nobody really will ever really tarnish that. And again, if somebody were to tarnish that, that would be the end of Bitcoin, but we're talking about something really difficult to achieve. If, on the other hand, you live in a developing country, your objective isn't really to defend wealth. Your objective is to move to a currency that allows you to create wealth. Because if you're in a developing country, most likely you're having to deal with all sorts of shenanigans with governments manipulating currencies. We all know the examples: Zimbabwe, just something a little bit more recent. Just look at Argentina just before Milei came into government. They had huge problems, and they're still dealing with them, of course, but they had huge problems with inflation. Venezuela had huge problems with inflation, and the problem with those currencies is that they actually don't allow you to transfer any sort of economic output into the future, right? What you do today, you have to consume today, because otherwise you're utterly screwed, right? You can't transfer anything into the future. So Bitcoin doesn't really kind of appeal to you. I mean, it might, but what appeals to you, in my opinion, is a currency that, it has its problems, but it isn't the Bolivar, it isn't the, I forget the Zimbabwean currency. You get the picture. If all you need is a phone and then internet connection, and you have access to dollars, what are you going to do? Well, you're going to go flock to dollars. All right. And I think that this is really the kind of, let's call it the Trojan horse for the US government to really push the dollar even further in, to financial markets, and in places where necessarily that wouldn't originally reach on its own. All right, simply because, again, if you live in places that don't have financial services at the ready, well, you don't really need Western Union. You don't really need whatever. You have an internet connection, you have a phone, you have 90% of the tools to get access to dollars. And again, all you have to do is basically, and again, I'm simplifying here, of course. I mean, there are definitely hurdles in these countries, but the fact that you have this at your disposal, it really just is a game changer. All right. And we're talking about countries that have really a lot of people, and a lot of people that really want to avoid having to deal with their home country's fledgling currency and would much rather be on the dollar. All right. And crypto is the way they do it. Well, ideally, they would do it. All right. So to summarize, really, I often see crypto being touted as the dollar killer. All right. Something that will absolutely destroy the dollar and it will take its place. As things stand now, the way we've built crypto, really around especially stablecoins, crypto is actually a tool for the dollar to reach uncharted territory and actually continue to expand. And this is what we've seen. I'm just looking at USDC and USDT, with Tether. It's all the same chart. Up, then you have a bear market. Yeah, it might go down a bit, but then it just keeps going back up. All right, looking back at Tether, for example, again, up and to the right. Then you have a little bit of a bear market, up. This is a train that, again, maybe, because I'm making this video, tomorrow it's dead, it's over, it's finished. All right, but this is a train that, you definitely wouldn't be shorting this kind of a story right here. All right. So again, stablecoins are really a tool for people to have access to the dollar. And really what stablecoins are doing are actually funneling money into T-bills. So to answer even the question that, crypto bros like to ask, oh, who's going to buy the bonds? Well, you, meaning the people that go into crypto, not even necessarily to trade crypto, but you might just like read it on the internet. This is how you get access to dollars. Done. You're in the crypto space, right? And you have dollars, which are much better than whatever fledgling currency you might have to deal with in your home country. I'll leave it at that. Hopefully I made everything was clear. If you like this kind of content, consider leaving a like and subscribing to the channel, and I'll see you next time. Bye.